price rally in Indonesian Stock Exchange, which began in the middle of the year, continues after Bank Indonesia and the U.S. Federal Reserve, or the Fed, hint there would be another interest rate cut in the coming months.
The Jakarta Composite Index, or JCI, the main price indicator on the Indonesian Stock Exchange, or IDX, finally broke the 8,000 mark on September 17th, amid a growing market optimism after the announcement of rate cuts by Bank Indonesia and the U.S. Federal Reserve. During the day, the JCI closed at 8,007, the highest level in the IDX's history. The bull market began in the middle of the year, after hitting its lowest level of 5,969 on May the 9th, due to growing uncertainties in the global economy. The bullish mood continued in the following months amid the easing of the tariff wars between the United States and its major trading partners such as China, and an improvement in the country's macroeconomic indicators. The fall in the interest rate has become the main driver of the latest increase in share prices in the domestic in recent months. On September 17th, Bank Indonesia cut the benchmark 7-day reverse repurchase rate by 25 basis points to 4.75%, the lowest since late 2022, and the sixth cut since it kicked off an easing cycle in September last year. Speaking to reporters after announcing the latest rate cut, Bank Indonesia Governor Peri Warjio said the central bank would continue to assess room for further cuts to support the economic growth. Meanwhile, just hours after Bank Indonesia lowered its reference rate, the U.S. Federal Chair Jerome Powell also announced the U.S. Central Bank's decision to cut its key interest rate by 25 basis points to the target range of 4% to 4.25%. He also indicated more cuts would follow at meetings in October and December. The last week cut was since December last year. The country's sound economic fundamentals also contributed to the bullish mood in the Indonesian market. Indonesia's second quarter growth was better than expected, driven by robust investment and household spending, and showed the fastest pace since the second quarter of 2023. Gross domestic product accelerated to 5.12% from 4.87% in the previous quarter. Indonesia's annual inflation rate was recorded at 2.12% in August, essentially unchanged from 2.13% in July. Official data showed on Monday, holding comfortably within the central bank's target range and matching market expectations. The August headline inflation rate was the lowest since February 2022 and within the central bank's target range of 1.5% to 3.5%. With such sound macroeconomic indicators, market analysts believe the bull market would continue at least until the end of the year. However, investors are worried that Bank Indonesia's dovish monetary policy could hurt rupiah, as the lower yields of the government bonds could lead to foreign capital outflow. On Thursday, September 25, the Indonesian currency weakened to 16,749 rupiah per US dollar from 16,684 rupiah in the previous day. The rupiah has slipped 3% in 2025, making it the worst performing currency in Asia and leading to multiple interventions by the Indonesian Central Bank during the year to defend it.
The Indonesian Stock Exchange, or IDX, has performed quite well lately, with the main price index breaking its all-time high amidst downward trend in interest rates and the country's resilient economic growth. And our guest today is the head of research at NH Korindo Sekuritas, Ezaridho Ibnutama. He will share his insights on the latest trends of the local stock market. Hello, Ezar. How are you doing?
I'm good. How are you?
Great. Thank you so much for joining us in the studio today.
Yeah, thank you.
Yes, definitely. We'll be speaking about some important topics, especially on the Indonesian stock market.
Absolutely.
And the first question, one that we are all urging to know, is that the Indonesian stock market has shown very strong performance recently.
Yeah.
And in your opinion, Azar, what are the main drivers of this price increase?
The main price increase has definitely been the interest rates, as you well pointed out. So the lower interest rates means that there's a lot more spending habits as well as investment habits, because mainly traders would take some margin out. They would actually borrow money to actually buy some stocks, and this sort of euphoria is sort of in line with what the new Minister of Finance has actually stated, that maybe in the next 10 years, in 2036, if I am not mistaken, he predicts that JCI might actually reach 36,000. Right now it's 8,100. Maybe it's too euphoric for some investors. Some people say he's not optimistic enough. But as we see that there's a transition between the old guard, which is Sri Mulyani's sort of conservative and prudent stance when it came to how she did her fiscal policies, we're seeing a much more aggressive and what people are calling a more cowboyish sort of policies with Mr. Purbaya. So there has been a shift. If you look at our 10-year bond yield, it's still in the safe zone, right? It hasn't really went up to an extreme degree, but it has gone up quite slightly, mainly because people are seeing the shift between Sri Mulyani focusing more on bonds and safeguarding the bond yield, right, which she has done incredibly well, to Mr. Purbaya's sort of more aggressive focus, which makes a lot of investors think maybe it's the best time to actually look at equity instead of bonds right now. Right.
So I guess there's a trend upward towards optimism, especially during this time.
Yeah.
How would you say we fare compared to other Asian stock markets? How does Indonesian stock compare to our Asian peers?
Well, in the first semester, we didn't really do quite that well. India was having all-time highs in the first semester. Vietnam was also having all-time highs in the first semester as well. Indonesia was lagging a bit, but I think that it's mainly because a lot of focus was all around the place. So if you can remember that there was a lot of wars, that there was a lot of instability, so a lot of people were moving out of the Chinese stock market and they were trying to find competitors for that, for what they had seen as a credible prime place of investment return, which is China, to India, to Vietnam. We're seeing that Indonesia, maybe our economy isn't as big as India or as small as Vietnam. So Vietnam is starting from a low base. Now the medium, sort of mid-tier economy, such as Indonesia, is being looked at in terms of our potential growth trajectory in the future. So we're seeing that a lot of investors, despite we having around 47 trillion in net foreign outflow, we're seeing that most of that outflow has actually been because of the current, mainly because of the current global chaos that's been happening. What we've seen domestically has mainly been the resilience and stability that was promised in October last year by the Prabowo administration, right?
Another interesting topic right now is that after hitting its bottom level in May, the Jakarta Composite Index has continued rising and finally reached its all-time high, passing the 8,000 psychological barrier last week. Do you think that this trend of the bull market will continue, and how long will it last?
I believe that investors are looking for a bit of stability, especially after what they saw as Prabowo's consolidation. And we're seeing that, GDP growth numbers in second quarter was well above expectations. People didn't believe it, right? I certainly didn't expect it as well. Celios Institute definitely had some things to say about it, being well above what they predicted to be. They're seeing the third quarter might not be as of a surprise they don't really expect above 5% growth rate year on year for the third quarter, right? Which is coming out soon. But if it tends to actually be above the expectations by the markets, then the ESG should break out above its all-time high, right?
And how sustainable do you think this will be, especially looking into later on this year or even the next few years?
In the next few years, I think you would expect the rally to sort of continue as well. We've only seen just the first year. Of course, it was choppy in the first year, mainly because of global instability as well. We can see that when it bottomed out, it was not because of what happened internally in the country. It was mainly because of Trump tariff negotiations, right? Suddenly, Trump in around April announced a very high tariff rate for Indonesia, around 32%, if I'm not mistaken, right? After that, the markets kept on dipping down. But once we've already renegotiated, once Airlangga went to the US to actually lower the tariff rates, which is currently at around 19%, below Vietnam, I believe. So we're seeing that there's a lot of potential growth for Indonesia, especially since U.S. imports are 0%, which actually lowers the threshold for U.S. companies to actually not only sell their stuff here, but also invest a lot more here, right? So we're seeing as the end of the year approaches, we already know what the fiscal policy stance is. We know what the monetary stance is, which has shifted from pro-stability and prudency to a more growth and a more aggressive stance with its rate cuts as well. We've seen three surprise rate cuts by Bank Indonesia before the Fed even cut its rate once this year, right? They were very preemptive on that. Now I'm not sure if this is going to happen, but maybe Bank Indonesia might even cut their rates even further by the end of the year, right?
And well, on that topic, foreign investors still remain very dominant, especially in the Indonesian market. With the lowering interest rates, one of the concerns is the weakening of the rupiah. How do you think this will predict, especially in the future, of foreign investments coming into Indonesia?
I think foreign investments might actually be more cautious with the currency rates, especially with bond yields actually increasing in the past few weeks, but we don't really see that sort of spike, right? As I said, there has been an increase in the bond yields, but it hasn't been too aggressive, and it hasn't been a sudden spike as we look at Mr. Pubaya's fiscal policies in terms of what he's going to do with the Ministry of Finance. But what a lot of investors are looking at is the condition of the market. And the condition of the market is that consumption has been going down as consumer purchasing power has gone down as well. We see that third-party deposits have actually been decreasing as well. But what the government is trying to say with the injection of 200 trillion is that it's fine if you don't have any funds in your bank account, but because we're going to give the injection of liquidity to lower the interest rates in banks, so you can go out and buy and let businesses grow, because businesses can only survive if you consume stuff, right? That's what the entire message for the second half of the year needs to be.
And for last question, Ezar, the cuts in Bank Indonesia's reference rates have partly contributed to the price rally on IDX. And as in your opinion, what is the ideal rate Bank Indonesia should charge that is worthy for the equity market as well as the rupiahs? If you could just give us an estimation.
That's actually a very paradoxical view, because a lot of foreign institutionals will actually put a lot of their money to Indonesia's by their bonds, place money in the Indonesian rupiah, mainly because they have a high return. So if you can see that the spread between BI rate and the Fed rate is actually much more wider, with Bank Indonesia's rate being above the Fed rate. A lot more institutions are going to put more money in Indonesia. After the 1998 crash, I believe a lot of people I believe a lot of people state that if you put your money in the deposito, you can get a return of 60% per annum. That was during the financial crisis. That's when a lot of banks, a lot of individual high net worth institutions started to put more money from other currencies into Indonesia, because there's an attraction, right? There's an attraction, and that's when our rupiah actually went from, I believe, from a high of 14,000, I believe, during 1998, or maybe around there, and then it went down again, right? So we need to. If we look at, yes, the JCI has been increasing because a lot of people are having a lot more funds that are cheaper to actually invest in these securities. But we also need to see that there's not a lot of attraction in terms of return for people to actually place their money with the currency rupiah. So that's very paradoxical. If we had to state that which is the most ideal interest rate to balance all these out, it really depends. It really depends on how investors usually view the current economic condition. So there is not one, let's say, silver bullet to actually give the solution for currency, as well as to strengthen the currency, as well as strengthening JCI, because both of them require two different are not moving in the same direction, right?
And there needs to be more to be taken in consideration compared to a simple answer.
Yeah.
Thank you so much to the head of research at NH Korindo Sekuritas, Ezaridho Ibnutama. Ezar, it has been a pleasure talking to you today.
Thank you.
Thank you
So much.